Good morning. It is Friday, July the 6th. Taking a look at the morning charts, we're going to have probably some pretty good price action here around 8:30, which is about the time you'll get this video, and we'll see which way the market wants to move pre-market. Really, we've seen a slight pullback in stocks and commodities overnight, simply because the U.S. dollar continues to hold its ground. It hasn't moved any higher in overnight trading, but it's holding up in a very bullish pattern. In my opinion, it looks a little overbought, but overall, this is a bullish pattern and it could easily continue to move higher, which means lower stocks and commodities could trigger today. So let's jump into the charts and take a quick look. This is the US dollar index, it's a 4-hour chart. You can see we've got a major bullish pattern here, long bull flag. Did pull back 50% retracement, had a bounce, had a strong move down, and we saw a nice strong push up yesterday and a nice tight little bull flag, more or less. You could say it's almost a mini cup and a handle. We got a cup and a little handle forming here, and from there, if you take this pattern and flip it to the upside, there's potential for this move from the low to the handle. If you flip that to the upside, we could see around 84 hit on the US dollar index, which makes about sense. If you look at these previous highs, you break the high and you run a couple more cents. You break this high, you run a few more cents. So for us to see this pattern flipped, we would break this high and we'd run a few more cents to push to a new high and to start possibly another major trend to the upside in the US dollar index. If that happens, then we're going to see stocks and commodities continue to pull back. Now there are agricultural stocks and agricultural commodities that are really on fire simply because of the drought going on, and they're kind of helping hold the market up somewhat. But overall, they're kind of more of just one area. Overall, I think the whole market is holding kind of its own and ready to fall at any time, but that drought is actually helping hold the market up a little bit simply because a lot of commodities have rallied 10, 20, 30 plus percent in the last 2.5 weeks simply because of the drought. Anyways, taking a look at the chart, let's just zoom in on the US dollar index a little bit more. Excuse me. If you look at this chart here, we've got a couple of things I just want to point out. We've had this we had this big correction down here, came into support. We did have a pretty strong thrust to the downside, and then we saw the market kind of do this slow kind of climb up here. It started to look very bearish at one point, and it looked as though it was going to roll over and head lower, but we did get a strong surge to the upside, and from there we got a nice move up and a tight bull flag. We've got kind of the similar pattern that had formed here again, a strong move down, got this slow climb up pretty much to the halfway mark through here, just the same as what we saw here, and it had a tiny little pause, and then we got this big move to the upside, very similar to what we saw back here with a bull flag, and that's where we stand right now at new highs. And during this time here, when we saw the US dollar kind of grind its way up, we actually saw stocks and commodities hold up fairly well and actually pull back fairly sharply through this level right here. So that's something that I think it could happen again, and hopefully is just around the corner. We're positioned for it, and even if the US dollar kind of chops around here for a bit, if it's anything like what we saw back here, we'll actually see stocks and commodities have a 2 or 3% pullback, and that will put our double leveraged ETF into the money for 6%, somewhere in there, and we'll be looking to possibly flip our position to get long depending on how things unfold. So that's kind of where we stand for the US dollar index. Again, we've had this tight bull flag forming overnight. It hasn't really given up any ground, and the fact that it's holding up this strong and more or less above some key resistance levels, it's still somewhat in this resistance zone. It's trying to eat through this level. It's pierced a little bit higher, but overall it's pulled back down into these previous spike highs, and once it eats through that level, then it'll naturally want to break out and make a run higher. Now just zooming back a little bit more, you can see there are a couple of levels of resistance. This is the one that it is struggling right now, these previous more or less these 3 sets of peaks. After that, we've got this level here, and then we've got the ultimate high, which is up here around the 83.60-ish level. So overall, the US dollar is holding up nice and firm, and And the fact that it's holding up strong, we're seeing some money move out of stocks and commodities in overnight trading, as a lot of traders are anticipating another thrust to the upside, at least to this level. If not, it could move all the way up, possibly even into a new high or to test these previous highs. Looking at this pattern here, we have a nice thrust to the upside, consolidation, simple measured move. You take this last thrust, add it to the upside, and you can see we're testing these next highs, which is very bearish for the equities and commodities market. Taking a look at commodities, see how they're unfolding this morning. Here's a crude oil chart. This is the weekly chart. Crude oil is starting to look pretty good. You can see here we had a multi-week, multi-month correction, came down to a support zone, which more or less continued right through the middle of all this noise here, consolidation. We have come down with a multi-week correction, have put in a nice bounce here, and overall, if we jump to the daily chart, you can see where we stand with the 50-day moving average. We had a very strong bounce to the upside, and after testing support, and now we're starting to pull back. And what we kind of look for here now, this bounce I think may have been a nice bottoming bounce. So what we're looking for is a more or less a Fibonacci retracement. We take the low, we take the high, and what we want to see here, if we just zoom in a little bit, so we want to see about a 38% or 50% or even 61% retracement. So we want to see crude oil pull all the way back down, preferably to the purple line. We could very easily, because it is a pretty major bottom, we may see it actually come down into a double bottom, could even pierce that level, and depending on how it gets down there, if it's lighter volume and the intraday price action, it could, even if it pierces this to a new low, that would still be more or less considered a double bottom, and from there it could be a great opportunity to get long for a major rally in crude oil that could bring it right back up to the $100 level. So overall, this is a nice impulse wave. We've broken a couple previous highs. We've broken this high, we've broken this high. We have more or less come up to resistance, which is this last little breakdown level, also the 50-day moving average, and now we're just kind of having a nice little pullback, and we'll let it settle down into this area down in here somewhere, at which point we could be looking to get long. And I'm a little more bullish on crude oil now that we've had this impulse wave showing there are some buyers in there, and any little bit of a pullback will be looking to get long. Looking at natural gas, it's a 4-hour chart of natural gas. You can see we broke these previous highs. We've had pretty nice strong run up here. This kind of pattern, just how it pulls back sharply here and continues to push that high to new highs. I'm not a big fan of jumping in up here. It's very, very lofty. Just drawing a trend line on natural gas. You can see how steep it is. Really, it's not sustainable. And if you look at these previous rallies that have been similar steepness, when it breaks down, it can turn into a bloodbath pretty quick. So really, we are breaking a basing pattern from the looks of it, and we're starting to get the momentum overall of the market is starting to reverse up. But really, we need to see this some profit taking and some people get shaken out of the market for it to come back down and possibly give us an entry point as it pulls back a bit and possibly starts up for another run. So I'm not looking to get in natural gas yet, but it looks as though the momentum has shifted and it's gone from down to more or less sideways and possibly starting to work its way higher. Looking at gold, 4-hour chart of gold, pointed out a couple days ago, we came right up into resistance. This key level, which is through this previous high, also the red trend line, we still have a series of lower highs. More or less came up, kissed it, and now we're seeing it continue to pull back. Gold's down another percent this morning, silver's down 1%, and just looking at this the price action here, we could see gold continue to work its way down to test these lows again, possibly even make new lows. And again, if the US dollar does take off and push higher, then we could see gold and silver pull back a bit more. But that being said, gold is more of a safe haven than silver, so if there is some pretty negative news out of Europe and say the US dollar does take off, we're probably going to see gold probably hold up a little bit better. I don't know if it'll make new lows or not, but it's going to hold up better than silver, simply because if there's more issues in Europe or they don't resolve some of their issues or have a plan at least, then we're going to see money move into gold for people to put their money and try and hold their value. So gold will hold up probably no matter what kind of happens compared to silver. Looking at gold miners, they pulled back pretty good yesterday. They're more or less still consolidating in this kind of downward, this major bull flag. We've got a nice run up, and now we've got a consolidation. We've got a nice 1, 2, 3 wave correction. The question is, can it start to break out of this more or less level, and can we see it start to move higher? So that's kind of where we're standing right now. If the market, if we don't see gold and silver start to move up, and if the dollar doesn't start to fall, then we're going to see, I think gold miners just can come right back down. They could possibly even test these new lows depending how things unfold. Overall, I'm not a fan of gold miners at this time. I'm waiting for them to start to break some momentum to the upside and get above this resistance level, possibly even break this previous high before I really consider the trend to be moving back up again. So overall, not a chart that I'm really that excited about at this time. Looking at silver, silver came up to a resistance level, as pointed out last week. Came up to this level and has been rolling over ever since. And I think right now we are coming down to a support zone, just coming across these tops. We've got more or less a breakdown level here, consolidation, consolidation and breakout. That now becomes support because we're above it. And the question is, do we continue to head lower or not? Overall, silver remains in a downtrend with a series of lower highs, lower lows, and we're not looking to get long yet. Bonds, 4-hour chart of bonds. Again, these are the 4-hour charts, but they allow us to zoom back several months. We get the big picture. It's kind of like looking at the daily, like a hybrid daily chart. You get to see the intraday price action and volume bars broken up for every 4 hours. So each bar is really about almost a full day, but you kind of get it broken up in a few more pieces, allowing us to get better price action of really what's unfolding. Looking at the bond chart, I was looking at the shorter term time frame, which I'll pull up in just a second. Bonds have been acting pretty nicely within their kind of range here. Again, a break of this range, we're probably going to see a substantial move to the upside or the downside. Naturally, first thrust, I'll cover it again. Next thrust will be up to this level. Next thrust to the downside will be down towards more or less this level down here. So, which means if we get a breakout to the upside, we're going to see a run probably up to the upper limit to test these highs, most likely even go higher, but this will be first target and it'll be hit fairly quickly. If we break to the downside, we're going to see this lower level here get tagged pretty darn quick, and it'll likely continue to go sharply lower, but those are the first targets where it'll probably pop and run very quickly within 1 or 2 trading sessions. Now just jumping to the 60-minute chart of bonds, I think it was a 60-minute chart, and just zoom out a little bit. I think I was looking at the futures chart, but this is regular trading hours, so you're missing kind of the futures price action. But overall, I had another chart up earlier, and just looking at these patterns here and volume of the futures, which I can still see the patterns here. We had a nice impulse wave to the upside, a little bit of a bull flag, and then a measured move to the upper end of the range. Ended up forming a mini head and shoulders pattern. It broke down, had a small consolidation, had a measured move back down to the bottom end of its range. Here we had a nice impulse wave back up. Eventually started to pull back and just sold right back down, testing those levels. And then we had a strong pop and a consolidation, a nice volume, and then a simple measured move popped right back up into resistance. And then we had a strong move back down to the bottom level at support. And then we had another strong move back up, faded back down. Bonds have really just been playing out fairly nicely. If you're just playing the ranges, it's been a great play for playing the ranges in small intraday price patterns within this range. And overall, right now we're trading right in the middle of things. We've had a bit of a pop off the bottom, and there really isn't too much of a pattern right here. Overall, we've had a pop and it's consolidating. I wouldn't be surprised if we see it move right back up. Measured move to the top resistance. Simply it just tagged support. Naturally, it's had a bounce to the midway range. It's consolidating, and now we get a move up here. And again, if equities pull back, then we're going to see bonds move up, which is what we're anticipating. So it's kind of interesting to watch these patterns within this channel, and how you can do all kinds of small plays, channeling stocks and commodities. Now, taking a look at the SP500 daily chart. Here's the chart that I posted yesterday in the members area. We've got these previous highs. Again, this is the daily charts for going back all the way to April. You can see we've got this previous resistance, and when I draw resistance levels, I always like to try and tag on each key point at least 2 candles. I don't go off spike highs, so I'll go through a candle wick and make sure I touch another candle, so always at least 2 points. Same with here, I've touched a candle, I've touched another candle, and it just happens to run through another 1 or 2 candles here. And again, that cuts kind of the pivots, the more or less panic selling and panic spikes off the market, and give you a real true range. You can see where we ended up trading yesterday. We're right up at that resistance level. Doing the same here, we've got a candlestick touch, creating a 1 pivot. Excuse me. Coming across, we've got the same through this candle wick, and then it touches that one. We're at another resistance level at that area. And last time we hit these levels, we saw the equities market have a one-day pullback, a strong one, a pause, and then another pullback for a 3-wave correction. And from there we saw a move up. So that's kind of what I'm anticipating. We're going to see a nice move that will likely come down to this cluster, these 2 moving averages, the 14 and 20-day moving average, which it'll find some support, probably have a pause, hopefully have one more squeeze lower to bring it into support. And if we just zoom in on this chart a little bit, I'll just draw a couple boxes. Overall, if we go back in time and just look at these previous pivot lows, let me just zoom out a little bit here. You can see right where we're trading with this resistance level right now. If we look at these previous little tops, consolidation, we had a move down, a pivot up. So this is a pretty good resistance level, and that's right in the middle where we're trading right now. If we're zooming in on a shorter outlook across here, you can see next major support is actually, we've got this gap fill here, which generally will get filled, and just drawing a line across there. You just draw a line straight across. You can see we've got this level where the market came down. It kind of broke and gave way and picked up speed. Then we had a consolidation, so we've got a top here, a little bit of a breakdown here because we had some strong volume, so it's a key level. We had a consolidation through here for a couple of days, came back up, we pulled back down, had a 2-day consolidation, which means there's some good volume there, which means it's going to act as support. Again, we consolidated down here, had a little bit of a pop, so we got a little bit of a resistance level. Again, we got this gap window. This will be the bottom of the gap window. So I wouldn't be surprised if we see the market pull back down here, which it doesn't look like much on the daily chart, but it's about a 2-3%. And again, with the double leverage ETF, you're looking at 4-6% in a 2 or 3 day play if we do get this reversal to the downside. Now, taking a look at the futures chart this morning of the SP500, you can see where it's trading. You can see we've had these bounces to the upside. Zooming into yesterday and today, I'll just actually zoom back a little bit here. Yesterday morning in pre-market, the market was up nicely. It was going to put it into a very overbought situation. By the time the market opened way over here, the market gave back most of those gains. Unfortunately, it would have been really nice. We would have had a nice pop and drop if it could have held up into the open. Instead, it actually opened negative, sold a little bit, and then we had a bit of a bounce, which we ended up shorting. It would have been nice to short the big pop and get that drop, but the market couldn't hold up into the open. It gave back all those gains and then some. And we got a little bit of a dead cat bounce here, which we shorted, and the market's slowly kind of pulling back. Now, looking at this chart, you can see we're trading on support. We had this little bit of a more or less a bull flag forming. It broke above it, but the market is overbought on many levels. Again, we've got volume diminishing, markets moving higher, very bearish price action, and we ended up getting a short position yesterday, and now we're starting to see it's sitting on support. If we break this level, then we're going to probably see a pretty good pullback somewhere down into this level here, which is a nice steep drop in the market. Now it's gonna, a lot of it's going to have a play on what happens with non-farm payrolls, unemployment rate this morning. We'll see how that kind of goes. Overall, the market's set up for a nice pullback, and we're positioned for it at this time. You can see yesterday we had some pretty good volume, not huge volume, but definitely sellers were in the market yesterday, and they were in full control. We had a strong volume down, light volume bounce back up, and then we saw some strong selling back into the close. So sellers are in control, and if they can hold on and pull the market down, then we'll probably see a fairly sharp drop to fill this big gap window that we've got sitting in here. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.